Yo, what's up, man?
I'm good. How are you?
It's good. It's good. Hey, um, man, I don't even want to botch your name, but tell me your name. Tell me your name. I don't want to botch it.
My name is Amitesh. I'm a sophomore at Fordham currently in the Lincoln Center campus. Yeah, that's pretty much.
Yeah. So, guys, this is Marathon Money, Kenny Coins. You know what we all about: financial freedom. Sorry, guys. Um, so man, I reached out to him on LinkedIn. He got quite a bit of things going for him. He was like a summer intern at Goldman. He also has his own investment group. Um, at Marathon Money, we have a whole stock portfolio. We have different avenues to make money here. Um, you was also part of the Wolves of Wall Street competition.
Yeah, it was run by Harvard student agencies. We came as the third best portfolio with a 52% ROI in like 3 months. We beat the
Man,
S&P 500.
that's amazing. So I want to know about your New York investment group.
So I started this when I was in like a year ago. This year, Jan 2024. Uh, First I did like I've been trading since I was 14. Started trading in equities, then went into derivatives. So I kind of saw patterns in derivatives, like how underlying assets moved, how some of them were correlated. I found these patterns and I made an algorithm that will tell me what contracts are positions to take on a weekly basis, making sure my time exposure is pretty less. And at the same time, it does have some how do I say, like liabilities or like false defaults in it that it cannot account for. Like, like when the Middle East war tensions just popped up out of nowhere in the weekend and the markets were closed and everyone knew Monday was going to be a shit day. But, stuff like that is still something I have to deal with the algorithm. But other than that, it's been pretty good. Gives me like 4% per month in a best case scenario. There's no, major drastic news. But yeah, that's
Man,
pretty much what I do. That's how I generate, returns using options mainly. But I'm
yo, s-
diversifying into like portfolio. I'm constructing a tangent portfolio. I invested in it like a week ago, not even a week, like yeah, this week, and it's like 2.8% up. Very high beta stocks. So yeah, there's risk
so
to it.
what's in that? What's in that portfolio?
Just high beta stocks, including dividend paying stocks that actually give a lot, and then there's also the risk free rate asset, which is the treasury bills. Um, yeah, pretty much those high beta
Let's go.
stocks.
Let's go. Let's go over them each one.
Oh, they're all international companies. They're not traded on the U.S. stock exchanges. So, but yeah,
Okay,
if
that's
you
good.
want it, yeah.
Yeah, man, I definitely gotta check it out. Most of my portfolio, what I've been getting to as dividends and derivatives and options as well. Um, I've been looking at a lot of like I don't know if you ever heard of this company called UTLY. I've been getting like 9% a month in dividends.
That's pretty
Um,
good.
yeah, it is pretty good. But it's one of those things that like whatever they do that month is good. Um, Sometimes it's seven, sometimes it's eight, sometimes it's nine. Um, it's a monthly dividend stock. But I also been, playing with options. I got into like long term options and sticking there for like 8, 9 months. And so far, I got an Excel spreadsheet. As of right now, I'm like since starting, I'm probably up what maybe 700, 800%. Started off with like
Wow.
$500, probably at 15, 20 grand. I started another company called dollarstock.com. um but I'm interested in where you trying to take your company, New York Investment Group. Where you trying to take it?
I was just doing it for. I mean, I've been trading, so that's funny because I like to do it. But yeah, I was just curious to ask you. I'm just gonna ask you about the. You said long term options, right? You're putting yourself at risk for like unannounced or unpredicted events. How do you
Yeah,
deal?
but how
How,
do I deal with that?
yeah.
So a lot of people, I use my main baseline is supply and demand.
Mhm.
So a lot of my stuff when it comes to that particular section of the investing and trading, I'm using supply and demand and I'm controlling what's in the middle. So I don't go for, oh no, this is the trend. I don't really go for that. That's like a Hail Mary type run. What I go for is, okay, Right now, it hits demand. Or let's say Apple goes down to 190. 190 is demand. I wait until maybe goes down a little bit further down, maybe 187. I buy it at the money or in the money options. Um, 185, 186, 187. I buy there. I'm looking at the flow. I'm looking at open interest. I'm looking at a delta. I'm looking at data, and I'm also always looking at 180 days out, 180 days plus. Now, I know if it falls down to 184 because I'm in the money at the money, the option is not going to fall because I have an option contract back all the way into March 2025. So the premium is not going to come down that hard. Yes, I will lose about maybe like 5-10%, but I'll take that because I'm not risking that much.
Yeah, buying options does not give you a lot of risk. It's limited risk.
Yeah, so it's already limited. So if I buy $500 worth of options, you're only really losing on the maximum $500.
Yeah.
So even if I buy an option for, let's just say, a contract that costs $3-4, maybe five, maybe 10, whatever the case may be. You know what I mean? And once you're in the money, definitely in Apple, you're talking about contracts like 15, which is $1,500 a contract. So when I buy that, um most of the time I realize on the long term, even if it falls 5-10% on the stock, the contract doesn't really fall that hard. I don't know if you noticed that. Definitely on the long term, they don't check them out. They don't really go down that hard. They might go down like from $15 to 13, but one most likely a month or two later, that premium bounced right back up $5 more. And I'm not trying to get home runs. Me, if I buy a contract for $13, right?
Mhm.
1300 one contract. I buy a contract 1300. I'm just looking for that $13 to go up there to 15, 16. Then I'm out.
That's
I
good.
still have a long rate, and not only that, there's the open interest is at a rate. A lot of it, a lot of the things got to be the parameters got to be there. You know what I mean? And like you said, you're looking at underlying assets, how they move. So you're picking
Yeah.
trades that are in that area. Um, so to me, I try to stay on the call side. I really don't do puts. I try to stay on the call side. Um, Try to buy it at the bottom of demand. If it runs up and catch a wave, it runs up and catch a wave. If like for example, I got into Apple at 190 at an option contract for April 2025. It went to 230. The option contract was 17 $17, which is 1,700 per contract, end up being $40 because
Wow.
I was so in the money.
Yeah, that's really good. I never tried long term mainly. I never even,
You,
bought options. I always bought to hedge them. I'm more like a, seller of options.
yeah, so and that one thing I want to get into as well, is because that's what I used to do professionally. You know, what I mean, I'm not really I'm a long term guy. Um, you know, I'm a saver. I'm a investor. I take my money, I reinvest it. Um, so I make big pots. It takes a lot longer than what somebody who will sell options every day. I mean, they might get to 50 grand before I do, but they're going to lose that 50 grand 3 or 4 times more than I would lose my 50 grand. You know what I mean? Say for example, we put a time frame on it. In 2 years from now, I would probably make about 500,000. He would probably make 250 because he lost so much in between.
Yeah, that's always true. Like with
Yeah.
I have had experience where I lost. When the Middle East tensions just happened, when Iran decided to attack Israel, and then my positions were like, it was a week and I couldn't even do anything. Monday came and then boom, I lost 50% of my profits in one single day. So that was
Yeah.
like, it took me 2 weeks to get that. So yeah, that's something I learned. So I did more reading on risk management. So I'm trying
Risk
to adapt.
management is going to be the key.
Yeah, that's what
Risk
my
management is always going to be the key.
yeah.
So we you want to be very you want to be risk management, you're gonna want to be very stringent with that, strict. Don't over leverage yourself. And the best way to practice, my thing is, best way to practice risk management is like when your daily buying habits. And I'm not talking about just stock. I'm talking about just like you going to the grocery store. You
Mhm.
know what I mean? You gotta, if you have $500 and I told you you gotta make that $500 last 2 months, it's the same thing as a stock. You know what I mean? You gotta be able to stay in the game.
Yeah, that's very true.
You know what I mean? So you got to make that $500 last 2 months. So that means you got to stay in the game for 2 months before you get another. Let's say you're going to get a 1,500. So that means you got to feed yourself, you got to pay bills, you got to do all that. So you got to figure it out. And then there's a lot of people in this world, they have to figure it out because of their circumstances. But no, but when you're all good and you have money in the bank, you really don't think about that.
That's
And that's
true.
the problem with a lot of traders. It's like, oh, I have $10,000, I have $15,000. All right, let's put 5 grand on this derivative. Let's put 10 grand on this option. And it's just like, that's because you have money. But if you don't have money, you got to make it work. And that's how usually people become successful. And then after that, they fall off because their their risk management was predicated on their circumstances. It was not actually a discipline.
Yeah, I hear that a lot. Like, I have other friends and like family friends who do this for a living, and they told me that staying in the long run is more important than winning some 3% in a day or like 1% in a week. So yeah, long runs always make sure you always have cash position, like just cash in your account. So when opportunity presents itself, you have enough cash to buy up stocks at a really cheap prices.
Yeah. And like I like to say this quote, take calculated risk that is quite different from being rush. A lot of traders and a lot of investors, they're in this rush game.
Yeah,
And then
make
that's how you get burned. Like, oh, I gotta buy this stock. I gotta buy this option. I gotta buy this. I gotta sell this option. You know what I mean? I gotta do this strategy. And it's like, trust me, like, don't be in a rush to give the market your money.
yeah, patience is the key, man. You should just have
Yeah.
patience.
Don't be in a rush to give the market your money.
But like someone really wants to own a stock, they can do dollar costing averaging, like a
Yeah.
S&P SIP, and long term, you're talking about like 5 years down the road. If you do
Let's
your research good enough, pretty sure the stock is gonna go and pay you dividends.
don't
Pretty-
dollar cost average down though.
Is it
That's where
bad?
a lot of people, oh, it's bad. People, and I'll explain it to you. You know why people dollar cost average down?
Just to get the average price of the stock they bought it, it's just cheaper, and make sure
Correct.
they,
They
yeah,
that's what they tell themselves. But if a stock is falling, why would you buy more?
maybe it just reached a part where everyone thinks it's fair value or reaches support level where everyone's buying it. Maybe
Yeah,
its earnings are doing.
a falling knife is a falling knife.
Yeah, that's also true, but like it's gonna stop
Yeah,
somewhere.
you're gonna stop, but you're not gonna you're gonna dollar cost average all the way down.
Nah,
Does that make any sense to you?
not
No,
really.
it doesn't. So like, you gotta wait for the bottom. Just
Yeah,
wait, be patient. Even if the price fell down to 150 from like 190, and it bounced right back up to 153, but you don't get back into one like 158.
yeah,
So
that's all. I
that's all
mean,
right.
I would at that point if it reached 150, and that's where I think Apple has got its support. I would sell a put option at 145. If it comes
Yeah,
down, I'll take a cash position. If not, you know what, get the premium in it, keep it, take home. That's
yeah,
money.
yeah. That's what you do. That's a smart move. But if you're on the buy side and you're buying the stock, and you gotta understand, a lot of people that's gonna listen to this, they're not gonna be buying options. They're most likely gonna be buying stock. That 95% of people in this world buy stock. Who's ever in the stock market, they're not buying options. So what I'm trying to tell you is this: um, that it's better to buy the stock at 158 than average all the way down from 190. 190 all the way down to 150. You're it goes down to 185, you buy more. It goes down to 180, you buy more. Down
Yeah,
175, you buy more. It's better if you hold your money, buy $2,000 worth at 158. Because then the
yeah,
bounce will be, then you'll get a bounce. You'll more likely get a bounce to 175, and you're already $20 up per share.
yeah. That's a good thing. Do you like do this on a daily basis? You said you
Yeah,
have
I
like
do. Yeah, I
you.
do.
Yeah, that's
So,
good.
and on the option side, for me and you, on the option side, I would, why it's falling, I'm looking at option prices. So if we're looking at 190, it goes down to 170. We're already looking at Pacific date. We're going into the option flow, who's buying, what option date is being bought up. We're looking at that. You know how to look at that, right?
Yeah, open interest.
Open it, not just open interest. There's a flow called option flow where you can see what date is being bought up.
Okay. No, I did not know about that until now.
You don't know about that? Let me see.
No.
It's like an option log. You can actually see what contracts is being bought up.
Is it on like Bloomberg or it's just like an online?
Um, what platform do you use?
Um, well, school's got a Bloomberg. Apart from that, I only go there if I need to like really look at all
No,
kind of data. I use
no.
Safari
What platform do you use
for
to
trading.
trade on?
I don't trade on the
Yeah.
U.S. markets. I trade in international markets like Indian markets.
E- yeah, even if you
Yeah.
trade on it, yeah, international markets, there should be a way to see like the logs, you know what I mean?
We just look at OI, which is called open interest change in a day-to-day basis. That kind of gives you like how many people are trying to buy at what price. Like I can show you one in case I don't know if I can share it here, but it basically tells you levels where there's enough put buyers or call buyers, and it's a chart. It's like a chart. I mean, you could read the data, but that's going to take forever. But the chart just literally tells it out for you, where you can see clearly where there's support, and it's all big guys playing all these moves. Very few retail investors are in there, but yeah, the chart really tells you a lot of data. You can just look at it, 30 seconds. You know where you kind of know to get out of that stock or the asset.
Okay. So I know on the Indian stock market they have it as well because
Mm-hmm.
I used to trade on there.
Oh,
Um,
okay.
so I know they have it as well, but it's basically a log where you can see, okay, 100 contracts was bought for this expiration date, September 30th, whatever week that is. You know what I'm saying? You can actually see that, and you can see that, okay, everybody's flooding to that date. And now you're looking at that date in the future, and you're also looking at the price, and then you can get in at a cheaper price when you also follow the chart and you see, okay, this stock is falling. I'm just going to wait until it bottoms out, see where it gets at demand, where you start seeing the volume and the levels of people buying it, eating it up. And you're
Uh,
also looking at the past.
did you say it's option flow or option log?
It's called I really got to get into, give me 1 second.
Yeah, no worries.
So what I know is on Thinkorswim, it's like a
Okay.
option stat. Basically, it tells you go into a particular stock. It tells you what expiration date is being bought up the most,
Okay.
and you can see it on every stock on Thinkorswim. I know whatever. I don't know. See, the thing about it, I don't know what particular company you're looking at that you do the trading on.
Yeah, I don't use Thinkorswim, so we probably
That's what I'm
gonna.
saying. But most companies have this.
Okay.
So, but I don't know if most companies have it, but I don't know if you have it. So I can try to, when you go to the stock and then you go to the options, there is like something underneath where you can see like, okay, what is the log? And then when you click on it, you'll be able to also see like, oh, somebody bought 500 contracts on for this date
That's pretty good actually. Knowing
call,
that
and some,
information.
yeah, and on somebody bought 600 puts on this date for this stock. You should be able to see that. I don't know what platform you're using, but usually you should be able to like see that on that platform. I think that would help you a lot.
Yeah, I'll check it out. Call my broker up and ask him if that's possible.
Yeah, but man, dude, so where do you, like, now you got your fund going? Um, where do you see yourself in like 2 years with your
Years.
investment group?
Oh, I think I'm probably gonna find more sourcing like capital investors. I did find one person, one to two here at New York City, but the problem was getting the funds from there to India would charge a 20% TCS charge, and
Yeah.
even transferring it back would charge 20. That's 40% I need to make, and that's like crazy. And I can't do 40%. Like I can, my algorithm has a prediction of 52% ROI, but you got to account for like all unpredictable stuff in a year. I'm talking about. So I accounted for like at least minimum of 25 to 27%. And my tangent portfolio, October 2023 as well, I got around 52.37 in 6 months, but I did sell all those stocks off. Yeah, and so still, it would not be a viable option to transfer money from the U.S. to India and then back to the U.S. So I did not proceed
Let me
ahead.
let me see what I can. I think I could definitely help you with that.
Ah, thank you.
Yeah,
Okay.
we might be able to work together and figure out something. But yo, so are you ever thinking about doing stuff in the U.S. market, or are you just going to keep it in India? Or are you trying to buy? Are you going to take the investment group and say get some real estate, or buy companies, or buy like private companies and stuff like that?
I mean, we're not that big. All we have is like $50,000, so I don't think I can buy
I know,
anything.
but and in 2 years,
But yeah, definitely. We have a lot of capital. Yeah, the real estate is something that I don't have a knowledge of, but my mother and dad have a lot of knowledge. So probably yeah, but more yeah, I really wanted to do in the U.S. markets, but I can't open an account in the United States because when I went to Charles Schwab and they're like, hey, you need to have $25,000 minimum in your account if there's any fluctuations, like because there's margins that keep changing on a day-to-day basis if you're trading options or futures. So I told, and they were like, yeah, you need to have like 25K plus. And I'm like, okay, that's an hassle because moving that 25 from my Indian account to here is going to be even more hassle because they're going to charge 20% fee. And I didn't want to really go through all that. So I was just waiting for, getting a proper SSN ID and then finding investors here who can actually do it. Like I found two, as I said, but I'm still waiting for opening an account with Charles Schwab. But yeah,
yeah.
pretty much.
Man, I appreciate you coming on the show. This is Marathon Money. Check out Marathon Money Plus. Kenny Coins. Thank you.
Thank you.
Wait 1 second.
Yeah, no worries.